Did you guys know that 76% of small businesses that they've abandoned international partnerships because cross-border payments felt like a black box? Things like unclear fees, unpredictable delivery times, and of course, no idea where their money is. So hi all, welcome to Instant Payments Decoded. I'm Marcia Klingensmith, you're the Instant Payments Maven. And so today we're cracking open the black box of cross-border payments. Every year, $150 trillion flows between businesses across borders, but how it moves is often opaque, it's slow, and it's expensive. So whether you're a fintech serving global freelancers or a bank supporting immigrant remittances or a platform paying out creators, you've likely felt the pain. And so today we are going to explore who is sending money and why, whether from migrant workers to marketplaces, why it's been broken for so long. So we'll talk a little bit about FX risk and compliance complexity and settlement uncertainty. And then we're going to talk about what's changing. We'll dabble a little bit on things like stablecoins and CBDCs and escrow guarantees and ISO 20022. And we're going to bring it home with practical strategies for banks and fintechs and platforms on how to de-risk, modernize, and monetize cross-border flows. And before I start with the quick round of intros, just a little logistics. Like if you guys, I love to have these conversations interactive, so we can bring you off camera and on mic. So if you want to raise your hand or if you want to put questions and comments in the chat, we totally love interaction. I will also have a few polls for you guys too. So let's have fun with this. Okay, so let's go around. Marwan, why don't you talk a little bit about yourself and global B2B payouts and how you're streamlining small business flows?
Hey guys, thank you, Marcy. Can you hear me okay?
You're doing great.
All right. So I started Veem. I used to run e-commerce for Western Union. Got into Western Union through an acquisition of a company called eBillme, which I founded and sold to them. We started Veem to make it simple for businesses to move money around, domestic and cross-border. Veem means very easy exchange of money. That's the term, and we found that along the way that cross-border payments is substantially complex. That we needed to find ways to constantly streamline, simplify, and dumb it down. And when I say dumb it down, a lot of the customers that we typically service are SMBs. They generally are under 20 million in sales, and they just want to send their inventory and service their customers. The last thing usually on their mind is trying to figure out how payments work. They find the whole thing to be quite complicated, cumbersome, and not sure what to make out of it. And especially the more modern, newer businesses, they tend to kind of think of the world as like what they do on a day-to-day basis. If I send you an email or I send you a WhatsApp, you get my WhatsApp instantly. I don't wait for 3 days for WhatsApp to show up. And so they think of payments like that as like, why do we have to wait 3 days for the money to show up in Vietnam, for example? Why is it not like my WhatsApp? So that's generally that's the crowd we tailor to. They tend to be pretty simple in their views on how payments should work. And we try to, as much as possible, tailor to that. So we do domestic and cross-border payments. We have quite a bit of methods that are tailored to faster payments, from same day to RTP in the US, and then push-to-card products, both domestic and international, and instant issue on virtual cards. So we have like 4 or 5 different methods of delivering payments that are ranging from same day to instant. And we've built up quite a bit of expertise around what works, what doesn't, around this type of work. So that's in a nutshell what we do.
Love it. That's great. Great overview. And I love the name. All right, so Damon, why don't you kind of give us a little bit over about you? You talk about like and navigating the licensing and helping local FIs with remittances and all that great stuff.
Yeah, I'm Damon Magnuski, founder and CEO of Acceleron Bank. We're a correspondent bank information. We currently operate as a fintech, and we're behind the scenes of 200 plus community banks and credit unions processing their international payments. And much to what Marwan said, like the banks themselves often don't understand the nuances and intricacies of foreign exchange and just payments in general. So our role is to help streamline that process, make data flows more efficient, and to get better pricing down to the end customer.
Awesome, love it. And Craig, you've been working in this space for a long time, working across lots of different regions. Why don't you give us an introduction of yourself?
Absolutely. Craig Borysowich, I'm a digital banking architect with International Monetary Edge. We work with a variety of bank and central bank entities around the world, typically developing either high-value payment systems or real-time payment systems in a variety of different jurisdictions. And I think, it's probably because I work on that side, obviously, like a lot of the development work goes into domestic markets. So banks and central banks are typically working on things within their own country. And now the emphasis is starting to shift. So we're starting to see a lot more conversation and discussion around how we're going to take real-time payment rails and connect them from country to country, which will hopefully make cross-border payments easier and more transparent and faster. However, it comes with a variety of challenges, right? So, that black box, kind of opaque wires transfer system that, the world has been used to was kind of designed to be opaque. It takes an extended amount of time to move money because there's lots of places for it to get caught up. Especially amongst the correspondent banking system. So, part of the challenge is working with banks and central banks around the world to understand that we don't want to create another correspondent banking system to facilitate real-time payments cross-border. And, what is it that we can do to build something that will be efficient and effective for moving payments cross-border?
Yeah, I love it. No, there's a lot of conversations, a lot of great work going on across the world. But let's start with like looking at this from a foundational perspective. Like, who are the people who are sending money, and why are they sending money? And so, Marwan, why don't you start off by talking a little bit about what are those most underappreciated segments that are driving the volume that we're seeing, and what and why, what are they doing with it? Why do they need this?
Yeah, so you can segment them into multiple sectors. So like there's B2B, B2C, and C2C. So I'll walk through each one of them. So on the B2B, which is usually supplier side payments and vendor payments, generally people that need real-time payments are doing essentially deposits on inventory, sometimes last-minute shipments that they need to clear right away. Sometimes they're looking to advance funds for a multi-stage type shipment. So like there's a container leaving Shanghai and it needs to come to California, and it needs to clear Shanghai before it goes out to the water, and they need a deposit because they just need to move it out, and so they're waiting for that deposit before it actually keeps going. So things like that are all around servicing a supplier or a vendor that you need to deal with. So that's like an example of B2B use cases. B2C use cases are contractor payouts, gig economy, influencers. These types of arrangements, there's a trend these days where I want to service my customers. I want to make them happy. I want to give them their payment at the end of the shift, at the end of the day. And so there's a desire for companies to speed up the payment and get it done because they feel like the longer you sit on it, the less attractive it is for the contractors and the influencers that work for them. We've seen multiple examples in that category. We, for example, have a restaurant platform that tips their waitresses and waiters like end of shift. We have examples of trucking companies that pay their truckers end of day or at end of shift. And like payees really like that, like the beneficiaries really like that, because it's kind of like instant satisfaction, which is what the employers want. So that's like B2C use case. And then there's C2C stuff where you guys all relate to this. Like you're sending money to your mom. You want the money to show up to your mom. Like you don't want your money to your mom to be like 5 days later. Like that's basically, that is self-explanatory. Consumer remittances by default, people expect them to be faster. And they tend to be the most sensitive actually to speed than the other use cases. Does that help, Marcia? Like that?
Yeah, no, I think those were all great use cases. And one of the other things I was thinking as you were talking about kind of like the gig and the earned wage access and the truckers and the tippers, there's also other elements of like necessity, not only just convenience, because like truckers, like they need that money in order to pay for their gasoline, and sometimes they even get advances on their wages so that they can just pay for the gas to fill up the truck to get on the go. So if they're able to get that money faster, that really can help them financial confidence, or just making their lives easier. And then I think the other thing I've heard around like tips for workers, it's also can be a safety thing, because these waiters or waitresses, they will leave work at 2:00 in the morning, and often they get paid in cash, and that's their target, right, for crimes, violent crimes. And so by being able to pay wait staff in instant payments where it goes digitally to their account, that makes them a little bit safer. And then I loved your B2B use cases about those kind of like the incremental multi-shipments and just helping them expedite that next phase by having the money available. So that's all really great stuff. Damon, from remittances to like the consumer to business utility payments, what are you seeing from your institutions, and are you seeing any shift in demand for these cross-border payments?
Yeah, I mean, primarily working with community banks and credit unions, it's mostly small business payments, right? But we do see some remittances. We see folks that have maybe properties overseas and are paying mortgages, things like that. We have seen a negative shift in just general payments due to the tariff scenarios, but we think that will recover. I mean, if you look back to COVID, there was a drop obviously in trade. But that recovered right away for community banks and credit unions. So we haven't seen anything drastic, just some slight negative ripples, and hopefully it just stays that way.
Awesome. And I don't know if anybody wants to respond. Let's just put our first poll out here. So we have this. Let me read it after I launch it, so give you guys time to actually read it. Okay, so when you see these, sometimes the polls pop up in front of you and sometimes they pop up in chat. So if you're not seeing them in front of you, look in your chat. But we want to know like what your most urgent cross-border use case is. Is it like supporting immigrant remittances? Is it enabling your B2B suppliers or gig workers, freelancer payments? Is it scaling global e-commerce payouts? Or, is this just not relevant for you right now? So go ahead and start responding. And again, remember, we would love to have like your questions, comments, and thoughts. So if you just want to share just some ideas or ask questions, we've got like these amazingly knowledgeable guys that would love to answer your questions. So don't be shy, so just feel free to reach out. So we're looking at some of the polls coming in. It looks like half are enabling B2B supplier and freelancer payments, and then we did get some on global e-commerce payments, and then also some that says nothing yet. Awesome. Well, okay, so everybody's been trying to solve the cross-border problem for a long time. It's always been a hot topic, and there's lots of great margins there. So we want to just touch a little bit on, what are some of those friction points or challenges that we've been seeing? And why don't we start with you, Craig? Like, what do you think have been the biggest infrastructure pain points? Is it compliance, or is it visibility? Is it the FX? What from your perspective is the challenges?
Well, I think certainly, a big part of it is unclear fees and FX charges and margins that happen along the way. You certainly see that in international remittances, right? So for people that are working in foreign countries and sending funds back home, can sometimes find anywhere between 18 and 25% of it disappearing as currencies change, as fees get applied along the way in moving funds around the world. The other friction point is the time frame, the delays that it takes. So sometimes it can be payment plus 2 days plus 3 days to move money around the world in different formats and different methods, right? And so, that certainly impacts cash flow for businesses and also for individuals in waiting for those funds to clear through.
So I think that those are really good points. I think we hear that a lot, and it's hard to when you're paying somebody to make sure you're getting the right amount to your recipient, because you don't want necessarily them eating up all the fees. It's like you want to make sure that if you owe them $200, that they get the $200, and all this uncertainty and lack of clarity, means you don't really know. Damon, from your perspective, like, what do you think, like, community institutions like misunderstand the most about all these cross-border risks?
I think for them it's a data problem. When you're sending funds to various places, there might be requirements that they need, like the beneficiary's phone number or something like that to relay to meet compliance needs in the delivery country. And most community bankers have no idea what those requirements are. And so something we do is we impose those on the user interface. So at least when the user is putting in information, if it requires a phone number or requires an IBAN or requires some other stuff, it just asks them up front. Because what causes a lot of delays is, you get the data to the community banker, they don't know what's going on, they send it to the correspondent bank. Sometimes they don't know what's going on. It gets to the beneficiary bank and they're like, we can't take these because the data fields are not correct. So then it gets sent back and it's like a 10-day turnaround, which nobody wants, right? So we view it as there's been a lot of effort to try and educate everybody up and down the chain of all the nuances and rules and all that stuff. But the reality is robots can take care of a lot of that. And that's what we advocate, for our clients, is like, you don't need to be an expert in sending money to Brazil. Your system needs to tell you when fields are missing and which ones are required, right? So that's kind of our take on it.
Yeah, and AI can play well. So I guess, and we'll be getting into that, and I think in just a few minutes here, about like the opportunities around ISO 20022 to kind of standardize the data and make sure you've got those points, and that people can, and the systems can interpret that, and you can apply your AI to all that. I'm going to do another quick poll for you guys, and again, like, feel free to raise your hand or whatever. So this one, we want to understand from your perspective, what friction points are you guys seeing? So what frustrates your customers the most? Is it like the unclear fees and the FX margins that Craig was mentioning? Is it delayed or lost payments and those slow turnaround times, like the returns that Damon was talking about? Is it regulatory delays due to KYC and AML challenges? Is it poor recipient experiences? And I know you probably like to say all of the above, but pick one.
Yeah, pick a favorite, right?
Yeah.
Pick your favorite. Pick the one that gives you the biggest headaches.
I think another thing around, how much is being delivered. What we try to do, and we can't do it for every jurisdiction, but we do it for most countries that we send funds to, is we tell you, it's going to cost this many dollars and they're going to receive this many euros, for instance. And almost always they do receive the full amount of euros. So that's an advantage that at least community banks can look towards. As you're using other systems, sometimes there's other parties just taking fees and no one even knows who they are, right? And that's so at least through our systems, 99% of the time they're going to receive the amount that at least the person originating the transaction is expecting them to receive.
Yeah, I think that's great. And I think Marwan, your solution is really good about providing that transparency and clarity on the end recipient too, right? Oops, you're on mute.
He's on.
Gotta get off mute.
Oh, okay. Sorry. I was just augmenting what Damon was saying, that a good chunk of the issues in cross-border are KYC related, and it has to do with localization of data in different countries. And so you need automation here to basically say, okay, if I'm sending payments to China or Vietnam or Brazil, what are the local requirements so that sorry, all of a sudden I'm like getting all this coughing. So we need the machine to be able to adapt to the jurisdictions and to the various requirements of the corridors, and that needs to be done in a way where the UI and the APIs adapt to the requirements, so that you reduce the friction and the likelihood of that transaction not clearing. The other thing I'd say, that generally correspondent banks, because they move quite a bit of money around, they understand all the regulation requirements, and they have all the machines and people to handle volume. When you start going downstream to the other set of banks, they don't know, and it's hard for them to do this stuff. And think of like a community bank. You're a local bank and you're sending money to India, and the regulator is going to show up as like, hey, what do you know about India? And the reality is you need quite a bit of tooling to do that. And so, you get into this back and forth that generally happens, that requires quite a bit of technology to be able to support these transactions and get them to move smoothly and report on it, so that you don't have any friction. So to make the story short, a lot of the actual headaches around cross-border payments, besides what already had been said, KYC and KYC automation and AML issues are probably the hardest of all the other issues to sort out.
Yeah, thank you. That's great. I'm like looking at the survey, and it looks like 60% of the respondents were saying that that's like their biggest headache too, is the KYC and the AML challenges. We also had 20% responding on unclear fees and FX margins, and 20% on delayed or lost payments. So thank you for sharing those insights. So it's really important, I guess, for the provider handling that UI experience to already know like what the requirements are for these end recipients, to make sure that everything's in order from the get-go, so you don't have that back and forth and friction of lost payments.
Well, it used to be that way, but it's more now that it's baked into the APIs, right? Yeah. So you need to develop a UI that can adapt. It can ask the correspondent bank, or whatever system it's talking to, hey, what do I need for this transaction, and display the right fields, right? It used to be that, yeah, every single UI had to understand every single nuance of every single country, but that data, it changes, but it doesn't change rapidly, and it doesn't change, very fast, right? So as long as you got to pick the right partners, and you can get that data just to feed right into your UI. So for anyone who's developing a UI, like, don't feel like you have to understand all these details, but your partners that are behind the scenes processing do, and and they can hopefully help you with APIs to just display what's necessary to get it done.
I love it. No, that's a good clarification on the challenges and the opportunities, which actually is a great segue into the next question, because it's like, well, a lot of things are evolving to reduce that friction and reduce the exposure, like the ISO 20022s and the message structure and the APIs and the transparency of even, maybe making the onboarding documentation available through the pipeline. So, Marwan, I don't know if you want to talk a little bit about stable coins, your perspective, like, how do they play a role in, network guarantees or with trust and speed, or if you want to, talk about another one of your favorite kind of innovations going on right now?
Yeah, so I mean, we've had quite a lot of experience around using blockchain in general to move money around. When we started the business, it was all actually on the blockchain, and over time we added additional rails, starting with the traditional crypto, and then over time to other flavors of that. I mean, so in general, stable coins will help with. There's two use cases for stable coins to start with. There's what people call sandwich use cases, so fiat, crypto, crypto, fiat, or fiat, stable, stable, fiat. So that's what they call sandwich. And essentially, you're using the stables to do a synthetic cross from one currency to another. In that construct, you basically are gaining some speed, not necessarily cost advantage. You can pick up some cost advantage, but usually in very long tail markets, not your mainstream markets. So that's on that use case. The second use case, which is accepting stable coins and being able to go stable to fiat, either as a pay-in method or a payout method. And that tailors to a demographic of users that are generally in long tail markets as well, where the currency fluctuates quite a bit, and it's very difficult for moving money out of that country, in particular US dollar. And so there's been an emergence of traffic from these types of use cases. So these are the two biggies in terms of like where the traffic is. In general, it's not the be all end all. It's a rail among other rails, and the way we see it, it's just we route between different rails, and whatever the rail that works for customers we use. So we're not necessarily married to any of the rails. We just figure out whatever is best to the user we work with. So I'd say in stable in general, like I would say that the use cases are emerging. They're becoming clearer. There's more traffic on them. There's more liquidity, but there's still small use cases in the big scheme of things.
Yeah, and we recently so I'd love to know what countries you're seeing more of the activity in, and I don't know, this might be a question for everybody, because the Genius Act is the U.S. Regulation or guidance on stable coins in the U.S. Just passed the Senate, so now it still needs to pass congressional approval, but where are the countries that you guys see the most activity around stablecoin today? And then how does this Genius Act impact, or how do you see that impacting activity in the US? And I know that wasn't on the list,
So the traffic is all from some parts of Africa and some parts of LATAM. That's the biggest. These are the biggest markets. So I mean, usually long tail currencies and countries where there's restrictions on. There's quite a bit of volatility on the currencies that like you see movement on the exchanges that is volatile enough to basically enable users to go for something that's more stable, quote unquote, that essentially gets you to keep US dollar and keep the US dollar flows moving in and out of these countries. So that's like what we're talking about is like Venezuela and Colombia and like Nigeria and Zambia and like basically a bunch of countries in Africa, a bunch of countries of LATAM. That's where the biggest traffic is, and some Asia, but like it's more concentrated in long tail markets.
One of the things, like, because I work a bit in the Caribbean, and I was on a webinar that they had recently, and they were, because I think it's like the same thing maybe in all these regions, right? Africa, Caribbean, LATAM, where like if they're pegged against the US dollar, when they're trying to get money between their countries, they have to convert their currency to USD and then deconvert to the local currency. And I think that's probably a factor there because that's doubly expensive with those rates. And so if they can just do stablecoin exchange, then it makes it more cost effective and timely in getting those remittances. And so they were doing some piloting of like paying their agricultural workers with the stable coin.
Yeah, and there's a lot of pilots going on. Some are more developed and more mature than others, but generally the use cases are if it's difficult for you to move money out of a country because it's such a long time and the fees are high, then it's worth it for you to experiment with converting that, pay the conversion fees from local to USDC or USDT and send it out. That's like basically it on that second use case, the acceptance and disbursement use case.
I love it. Why don't we talk a little bit about like smart contracts? Because I know that's one of those things where, you know, with blockchain, you can put those regulations and the timing and things like escrow can be handled a lot easier. Craig, why don't you share maybe some of your insights? Like where do smart contracts come into play?
Yeah, I think like programmability conditions in money and certainly the usage in stable coins brings a lot of opportunity on the way you tie the usage of stable coin into trade finance transactions, where you typically have a lot of transactions, a lot of things going on between a variety of different parties, and you can basically create settlement conditions on delivery and versus payment and a bunch of different mechanisms within that trade finance world, right? So, you know, where we do, you know, sort of letters of credit and you know, all kinds of extra paperwork and everything else to move things between companies, move goods between countries. In a lot of cases, the shipping costs and everything are based on estimates. A lot of businesses don't always have the opportunity to recover some of those costs because they've basically stated, oh, it's this, but then it ended up costing a lot more. Companies along the way eat those costs. So I think there's opportunity because you can sort of move things a lot faster, and you have sort of on-chain auditability of the transactions going on between the different participants. You can basically work on you know, edging out a lot of those hidden costs and fees and lost costs and fees along the way by leveraging a stable coin. And again, if a variety of parties are interacting using that stable coin and not necessarily transitioning from the stable coin to fiat, then you're also saving the FX costs along the way as well.
Are there, oh, so I just lost my train of thought. Hold on. Oh, the off ramp. I know. I think that's you know, where I hear all the costs associated. So stablecoin itself, it's like, okay, great. You know, you can program the rails. It's easy, cross border. But then, you know, there's not a lot of mainstream institutions, businesses, stores, whatever that can accept stablecoin. So you have to do that last mile conversion, and I think that's probably where the biggest friction and cost comes in when we're talking about stable coins. You know, how do you guys think about that aspect?
Well, we just view it as another form of foreign exchange, and there's cost to do the transaction, and those costs have to be borne by somebody, right? It's not free to change things from dollars to stable coins. It just isn't, right? And if you want credit to get it, you know, instantaneous from any coin to fiat, that's a credit product now, and now there's extra paperwork around that, you know. So we're generally, you know, agnostic to it. Like we want to, like Marwan said, like we want to be able to process any way that our clients want to process, but we also want to be transparent that, you know, a lot of people think, oh, I'm using stable coins and I don't have to do AML. And it's like, that's not the case, right? There's cost, you know, when you get a bank involved, they have to check both parties, period. Right? So if you think you can do that for free, that's that's a mistake, right? And I think as more and more vendors and more companies are willing to accept stable coins, some of that friction will be alleviated. But whenever there's a fiat change, there's gonna be cost and delay based on that, right? So like looking at your poll here, 66% are sick of regulatory delays. Stablecoin doesn't fix that, unless it's between two known parties and it's a repeat transaction over multiple times. But even then, they still have to check, right? So that might streamline a payment just like a repeat payment in fiat does today. But the reality is that's not going away with crypto, and it's not going away with stablecoins if you want to interact with the normal banking system.
Yeah, I think that's a really good point, because it's so important to ensure we're not fostering money laundering when we're dealing with digital currencies, which I think is one of the favored use cases, like the gaming industry, money laundering, right? That's a challenge. So, I mean, that's one of the nice things about the Genius Act, I guess, is because it's going to put regulatory oversight. It'll ensure that there's assets behind the stablecoin itself. So they'll have high quality liquid assets. It's going to make sure that no, you got a perspective on that. It's going to have, the AML KYC regulations applied to the stablecoins, ensuring that they follow the same rules that the regular financial institutions follow today, and put other consumer protections in place. So I don't know. Tell me, what was that?
Look, FTX had auditors that said they had high quality assets behind their coins, right? And they didn't. So who's proving it? I think, and even banks, right? Like Silicon Valley Bank couldn't survive a bank run. They had the assets, but because of just the changes in interest rates, they couldn't do it, right? So I think we are setting up for some epic blowups, right? And it's part of the learning process, and it's part of the deal. But like, just as speaking to some of the use cases, yeah, if I'm in a country with double-digit inflation and hardcore currency controls and a central bank that's terrible, yes, holding a stable coin is probably better than holding your local currency. And we see the case where, they accept stable coin and they only exchange out a little bit at a time as they need it into fiat, right? And to me, that's a great use case, because you're getting around a terrible solution. But if you're, CVS in the United States and you just happen to be sitting on 100 million, stable dollars worth of stable coins, and a bunch of influencers say, hey, that stable coin is not backed by real assets, and there's a run on that stable coin, yeah, they're not going to be able to liquidate all these assets in time. It's going to be like a bank run, right? So I think there's going to be it's counterparty risk, right? And so if you're trying to shift your counterparty risk from a bank to an unknown entity, I think most people are going to choose bank, ultimately at the end of the day. So I don't think it's bad to use stablecoins. I think that they're important. They're going to be a rail. I think for people in a normal economy, it doesn't make sense to hold stablecoins, right? It makes sense to convert it to your local currency or convert it into other assets that make sense for your specific case.
Yeah, I like it. I think I'm gonna have to do like another episode at some point in the future just on stable coins, because I think it's just kind of like an interesting conversation. To your point, it's like evolving, and what is that going to look like here, and what are the impacts? All right. Are there any so because I didn't ask you your question, which was about tech or partnerships that you think are kind of like leveling the playing field for smaller players. Are you seeing anything in the ecosystem?
Are you speaking to me or Craig?
Yeah, Damon. That was my question for you.
Yeah, there are a lot of developments. I think primarily the ISO standard will make a lot of the data issues potentially go away. There are still a lot of carve-outs that we're seeing that are gonna cause headaches down the road, and it's gonna be better than it was, but it's not gonna be as good as it could have been. I think over time. I think globalization, even though we're in a spot where, countries are raising tariffs and all kinds of other barriers, I think the trend is clear. It makes sense for importers and exporters to expand into other markets. And so I think that trend isn't going to stop in the short term. So community banks and fintechs and other parties need to be able to efficiently move these funds and do it compliantly. And I think there is a lot of technology that is improving those processes for sure.
Okay, so I'm going to do another poll for you guys. This one is, if you could only invest, hold on, let's launch this. Okay, so if you could only invest in one cross-border innovation this year, what would it be? Stablecoins, Escrow model for high-value B2B, an alias directory for wallet-based payments, a cloud-native compliance partner. We didn't actually talk a whole lot about wallet-based payments. I don't know if you guys have any thoughts while folks are responding to that. I was just watching an ad for Venmo on TV yesterday. And, Venmo's like, you don't need a bank account. You can use this money anywhere. I actually don't know. Is Venmo, can you use Venmo for cross-border payments today? I don't think so, right? I think that's strictly still.
Not that I'm aware of.
So what are examples, I guess, what are different examples of cross-border wallets? I know Revolut's been trying to enter into the US. We have Wise, I guess. So what are examples of different cross-border wallets while we're waiting on folks to respond to this poll?
There's like about 95 wallets around the world. Some are very prominent. Players kind of like the Venmo of each country, and they're very popular. And the more you go towards Asia and Africa, the more you're going to run into them. So we just actually yesterday we did an announcement where we are at Veem integrating with JazzCash, which is Pakistan's largest wallet. They're like 80 million users, and the money flows from the US and Canada and other parts of the world straight to it updates your balance on Jazz. So if you're getting paid from a business here or a consumer, essentially the wallet gets automatically updated. We have a number of implementations like this in different countries, but these wallets are pretty popular. They're in some countries, the primary relationship between the user and their money is actually their telco, their wallet, not their bank. So Gcash in Philippines, WeChat Pay in China, Jazz in Pakistan. There's so many flavors of this around the world. So they're quite popular, and they have a fairly large user base.
Yeah, I think one of the challenges is that distinction between what is a wallet versus what is an account, and what does it mean from what you can do. And certainly, I'm in the International Standards Organization side of things. We get into these discussions a lot, right? So, I've done a fair bit of work with Kenya. They have the M-Pesa solution, which again is it's a telco. They call it a wallet, but it really all it's doing is it's really just turning your phone number into an account number, and it's stored funds, stored value against your cell phone number. Is that really a wallet, or is it really just another iteration of an account? But it's an account that's not necessarily with a bank, right? So, versus something like what we do in the crypto space, where we talk about having like a cryptocurrency wallet, and it can also be hold and store multiple currencies, have identities that are tied to multiple blockchains, and other sorts of things. Is that again more like a wallet, or is it really just a multitude of digital accounts that exist on a blockchain collected into one space, right? So yeah, I think it's the distinction there is, I think it's about not having to use a bank account and being able to have stored value in a place other than a bank, right? And so the ability to do that, and then again, it's that ability to transact when and where you want, right? So and I think the challenge, whether it's a wallet or an account, is that it's only workable in places that can interact with that account or wallet to be able to transact with it. And that's where, the work that Marwan is doing to, sort of build the relationships across a variety of those solutions to try to aggregate and create the ability to more easily move funds and transact in, sort of multiple jurisdictions with different endpoints is going to become, really critical for people, not just for, cross-border business, but, even just people that work cross borders, right?
Yeah, I think that's invaluable. I mean, I love that the model. I mean, I guess Marwan, your model of like the sender can pick what speed they want to send their payment at, and the receiver can pick what speed they want to receive the payment at, and so everybody kind of gets money in the time frame they want, and then in the format they want. I think that's that's super cool.
Yeah, thank you. I mean, the needs are usually different, so that's why we did it like that.
It's true.
Well, and I think you were saying like the folks that are most willing to pay for the privilege of getting that money in real, I mean, for the speed are typically the recipients are the ones who want that money in real time, so they're more willing to pay.
Yeah.
And
yeah.
I think we see that in the US, even right with PayPal or Venmo, is a lot of people are using that. Yeah, I need that money. Let me redeem that money now. I'm willing to pay that fee. And that's one of those myths you get debunked, is that, people aren't willing to pay for money in real time. And it's like, yeah, they're willing to pay.
Well, but think of, and so that there's different use cases and different sort of magnitudes of this. So like consumer world, everybody expects instant, and so people naturally do that. But in the business world, if you have an AP department, the first thing you tell your AP department is like, wait till the due date.
The last minute.
Right, wait till the last day.
Yeah. So nobody's in a rush to pay. In fact, like most of them, they usually wait till the last hour of the day, and then they send the payment. They kind of know the cutoff times. So that's the issue, is that there's different objectives and different needs. But in the business world, the need for speed is driven primarily by the receiver.
But like, just because it's they don't necessarily want to pay it sooner doesn't mean they don't want to pay it faster, because one of the cool things, I guess, about doing an instant payments in the business world is that it settles in real time. And so even if they wait till the last second, like then they can wait till Sunday night or Saturday night, right? And then have it clear. And then also it helps with forecasting, right? You know exactly where your funds are at,
Yeah.
right? So then you can
there's
redeploy your funds.
There's the PowerPoints and there's the reality. The reality is, the bigger the payer, that they don't give a damn. They're
Right.
gonna sit on the bill, even if it's past due date, they don't care, because it's like, I have the money, I'll send it to you when I send it to you. It's like, unless it's a big supplier, then it's different dynamics, obviously. Then the supplier controls it, but in general, the payer sits on it till they decide to do it. And so, yeah, there's all kinds of efficiencies that you can pick up from faster payments, but in practice, these guys are like going to sit on the funds, and they talk a big game when it comes to real time, but when you ask them to pay a fee for speeding it up, they don't want to pay the fee. So
I think we see it, sort of in the online betting apps the most, right? Because that's where you sort of see the psychology of that option. And, with a company like Bet365, we've sort of seen, that offer, right? For $2 fee, we will put the funds that you just won in your account right now, and it's done. Or don't pay the fee, and then the funds will get there. And so it seems to be very split. Like about 60% of the people will just never pay a fee to get the funds faster. There's about very, very small percentage, like 2 to 3% of users that will sometimes pay a fee, and you don't necessarily know why they chose to pay the fee. And then the balance, that other 38% will pay the fee every time.
Interesting. That's kind of cool.
Yeah.
Great numbers. Just like looking at our survey, it was interesting that that folks just all responded that the cloud native compliance partner was actually, if they could invest in something, that's what they would do. Is there anybody on the session today that wants to share like why they picked that as their primary or their first choice? Like raise your hand if you'd be interested and open to sharing. Okay, we got shy folks here. It's all good. It's all good. That's all good. We're here to have fun. Okay, so we're gonna like get into the lot, just like the future outlook. Let's wrap up. So Craig, 10 years out, are we still talking about cross-border, or have we fixed all the problems and so it just fades into the background and we've moved on into something else?
Yeah, no, we have no shortage of problems in doing cross-border. So I have a feeling it is definitely more than a 10-year problem to solve. But I think we're definitely bringing more tools to the table, as each year goes by. And so again, as you get more options, more opportunity, it's going to mean that the decision-making capabilities, and maybe that's an opportunity for AI to tie in to sort of help customers, help banks kind of find that least friction method of getting funds from one place to another, is going to become more critical over time.
Okay, so more tools and evolving decision-making practices. Damon, how about you? What is your advice to financial institutions kind of sitting on the sidelines, waiting to figure it out?
Well, yeah, I think they should have multiple correspondents to deal with the various risks they have, right? So if you just have plain vanilla customers, then one of the big banks is probably right for you. But if you have any kind of interesting clientele, then you probably should have some specialists working with you to make sure that those payments are getting out efficiently and fast and compliantly, right? But I think in the longer term, our longer term view at least, is that much like Marwan, we're going to allow people to pick the speed at which they send funds and charge appropriately. But also, we're going to change the exchange rate based on the risk of the transaction. And so right now, it's kind of like a flat model, like it's just like $1 billion in and $1 billion out, and they just charge the same basis points fees. And we don't think that's appropriate. If you're paying for your daughter's school in Canada, that's a super low risk transaction, and you shouldn't have to pay a lot for that. Mm-hmm. If you're buying oil in Azerbaijan, maybe there is some costs to doing the diligence for that, right? So I think that's kind of where we're going to see it. So the margins they're not going to remain as high as they are now. It's just impossible. But we will see specialists come out who can do high risk transactions and charge a higher margin, and we'll see specialists come out that just do the lowest, easiest transactions with the tightest margins, right? So and I think there's space for all of those players in the market.
So it's kind of like your high. So this will enable like community banks to serve the needs, I guess, of all their customers, whether they're low risk or high risk. They can have just like portfolio providers that can help meet their needs based on what their customers. So risk-based pricing kind of thing.
We do that today. What the next step is to have the actual pricing reflect that. So we can take your risky portfolio and process it, but there's no. It's not a real time, like the exchange rate changes based on that risk. It's just a bulk change, right? It's like, okay, we're going to charge 1% or whatever more for these higher risk customers, but we don't even think that's appropriate. We think there's a lot of groups lumped into high risk jurisdictions or high risk industries that are really not high risk. They just happen to be tied to an industry that seems high risk. So we don't think they should be penalized if they're doing everything compliantly and everything's working right. But there are, every time, just think of it like this, it's a new transaction to a new jurisdiction to a new vendor. That's a high risk transaction for a bank. So they should just charge more on that first one. But as they get more experience with it, they can lower that margin, right? And I think that's where we're going to go with this kind of stuff.
Yeah, I like that. That makes sense. And so it can kind of be like smart evolving based on the risk as it changes over time. Love it. And Marwan, how about you? What partnerships, I guess, still will matter the most to succeed, like in a new cross-border environment?
Yeah, so we do quite a bit of partnerships with local payment providers, wallets, kind of like the closest to the end user, the last mile. So we're picking up from the user and terminating on whoever is the closest to the user in a different country. And that essentially requires quite a bit of technology and infrastructure because essentially you're doing partner to partner to deliver the payments from one end to another. So we're doing quite a bit of that. Some of that is publicly announced, like you see it on my LinkedIn. So for example, we did Lian in China. They're one of the larger payment processors, JazzCash in Pakistan. We're on the Central Bank of Nigeria. We're on a number of these types of implementations where essentially instead of sending the funds traditional ways, we're sending it partner to partner and having the partner deliver it to the end user on local rails. That's the fundamental construct that we've been working with. And there's quite a bit of situations like this in different parts of the world. And so that's all part of like a broader vision that you're turning what historically is a cross-border transaction that flows on correspondent banking to a more modern architecture where you're doing local to local essentially, and that is part of a theme that whether the transaction is really going from California to New York or California to Vietnam should be the same experience to the user. It should be flowing consistently. The only difference is FX. That's really what should be different. Other than that, it should feel like whether it's a global transaction or local, it should be all the same. So that's the broader construct that we work with. In order to do stuff like that, it's like fairly heavy on compliance and onboarding, automated onboarding, API stuff to essentially move the transactions to flow them from one party to another. So it's fundamentally a technology issue. It's not really there's compliance principles and compliance frameworks you have to work through, but primarily this is a tech issue that the industry is going to sort it out through tech.
And I guess because I'm sure there's a lot more. There's probably like new wallets, new last mile entrants all the time. Like, how do you pick like how do you figure out who's the party to integrate? Or is the idea with the APIs, it's like, here's our API endpoint specs, here's the contract, if you want to integrate with us, we figured out all the compliance and the tech and just hook to our APIs. Like, is that, yeah.
We only work with licensed providers in their countries, so we cannot, at the moment, we don't take unlicensed partners. So we're doing licensed entity to a licensed entity to deliver the payment. So it's not like open API, anybody can connect. Right. Yeah, that's one thing. And then the other thing is it does take quite a bit of effort to organize these things. They're not at a state yet where, just anybody can connect and all of a sudden money flows, because a lot of this requires essentially making sure that all the KYC requirements are being met so that you adhere to the principles that the regulator gives you. So they do require quite a bit of work to get them done, but they are a way to deliver a better experience to the user.
I love it. And that kind of brings us to time. So, so I've really enjoyed this conversation, guys. So cross-border isn't just evolving, right? It's becoming radically reimagined. And so if you guys are ready to de-risk your strategy, expand your reach, build your trust with your customers, let's talk. So this recording will be made available on the Instant Payments Maven YouTube channel, and feel free to reach out to myself or these gentlemen here. And thanks for participating, and enjoy your day.
Thanks for having us, Marcia. This is great.
Thank you.